Sentiment analysis and the use of like saying, well, is always compared to the past. There was one mention I spoke about it earlier, price-dependent sentiment, that looks at how prices reacted to certain words. They don't look at words as positive or negative, just at how they move the price. Now, in earnings calls, it's a very interesting subject we were talking about last week. They're very much predisposed events. The CEO comes on and he talks in a certain way, and he has analysts that call in and ask certain questions of him and his team, and they're very sterile environments. And I would imagine the PR agency behind the CEO is trying to keep it very incredibly sterile, so the CEO or the financial officer doesn't go off track and start talking about things he shouldn't do. And also on the printout and the press releases especially, press releases are really managed text that's looked over, and so there's no issues within that. Now, how do we as traders try to understand that and get value from that if it's a really computed document beforehand? And one way we can do is compare it to previous events, like marginally that call or the tone of voice, is it slightly more positive compared to previous ones? And then we say, well, previous ones, we can look at the last 100 earning calls or whatever it may be. And when you have the resources that we have now, you can do immense calculations on what's happening within these calls and these press releases.